Good morning. It's Monday, November 24th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So one quick note here, the front month on gold had switched from December over to February. So if you're in that December contract, you're going to want to roll over. Also, if you're not getting the Navigating the Week Ahead email with our weekly gold and silver price forecast, we will have a link shortly to register for that. Now, today does start a long seasonal trade here in the copper market. If you want more details, send an email to info@bluelinefutures.com. Now, the U.S. will clear more of its data backlog this week with the September retail sales and durable goods out for release. The Fed's Beige Book will provide some insights here as far as the health of the U.S. economy before the blackout period starts over the weekend ahead of that December 9-10 policy meeting. Now, overnight precious metals, they still continue to trade this consolidation phase after surging to a record high in the gold market in October and a record high here on the 13th in the silver market. You look at the gold futures here, down about $15, trading at 4,100. That's on the February contract. Now look at some key levels here. 4,003 is going to be your 50-day moving average, 39.97. That was that Tuesday, November 18th washout low here, and then 39.87. That's your key trend support. I'll update the tactical ranges here to reflect February and March here ahead of the opening bell here. Then you look at the silver market, down about 34 cents, 49.57. Key level support, 48.17. That's that 50-day moving average. 48.05, that was Friday's washout low here with the AI trade. We saw silver trade down about $2 here. A lot of traders coming in and buying that market here, playing that snapback recovery. And then you've got your key trend support at 47.96. So equities, you look at them, well, they're starting off the Thanksgiving week era relatively on a positive note here. Really the AI news out of Asia, the hopes, the revived hopes of a December interest rate cut. So you look at the S&P 500 up about 22 points at 66.42 here. So big snapback on Friday. And then you look at the NASDAQ here up 128 points at 24,433. So it's really strong demand from Alibaba's here, a relaunch of the AI app, a positive sign here for the AI narrative, while comments from New York's Fed Williams on Friday really gave investors the boost here that they were looking for the probability of the interest rate cut seeing in December. Now, a lot of people that are working closely with us here have been playing that yields will back off, and I've been pushing this declining yield narrative here for about 2-3 weeks here, with the 10-year yield pushing up to that 4.14% here, now backing off down to about 4.05. So you look at some equity insights here. Hedge funds, they bought U.S. equities here for a third straight week here, with the long buys outpacing the short sales at about 1.5 to 1. That's according to Goldman Sachs Prime Desk. You look at the earnings, 474 S&P 500 companies. They did report here 82% have beat the average analyst forecast here, with 15% have missed. There's no significant earnings here expected after the bell or really throughout today, except like Zoom and Allegiant and a few other ones. But you look at the economy, you're going to see Dallas Fed manufacturing activity coming out 9:30 Central Time. No Fed speakers here are scheduled here ahead of that blackout period. But over the weekend, we did hear from Boston Fed Collins said that she had made up her mind over how she'll vote at that next policy meeting. You look at the CME's Fed Watch tool, one of the things that we keep an eye on, 75.3% likelihood that the Fed will cut rates by 25 basis points at that December meeting, and it's up from a 42.4% chance just 1 week ago. You go to the January meeting, it's about a 60.4% chance of that 25 basis point interest rate cut, 24% that will be down 50 basis points by then. So you look at the dollar index here, just slightly lower, sitting at 100. Euro currency at 105.52, bit of a bounce here. Got close to that 105.11 area here, the 50-day moving average, before bouncing back up a bit. You go over to the Australian dollar, one of the markets that I'm keeping an eye on because of its close correlation here to China, and then also a lot of the deals they've been making with the United States. It really lowered its trade deficit with the United States here to its lowest level in 21 years here, as gold exports jumped almost tenfold here. And then you look at beef shipments. I told you what might have corresponded with the top in the live cattle market was when I opened up the fridge and there was steaks here from Australia in the fridge, and you look at those beef shipments, they climbed 47% here over the last month. Now, one of the reasons why we keep an eye on these different foreign currencies, because I get a lot of dollar haters out there. And if you look at the dollar index, it's really just an inverse basket against 6 different currencies, with the euro being 57.6%, Japanese yen 13.6, pound 11.9, Canadian dollar 9.1. You get the Swedish krona and then the Swiss francs. You look at those 10-year treasury yields, again backing off. One of the better plays here, one of the more defensive plays. So what I look at is when you get these types of economic regime shifts here, where trends really start to break down quite a bit, what tends to work, and it's long dollar, long bonds, long gold, having some S&P 500 puts out there in the portfolio really dampered quite a bit of that volatility that a lot of clients were expected to experience because of their long equities, long silver holdings, things like that. You'll get the volatility index coming off quite a bit with the DEES VIX here down at 2145. You look at the VIX as far as the cash VIX sitting at about 2320. It didn't break out over that 30 level, and it's still kind of consolidating right between that 20 and 30. You go over to Europe and Asia, well, the European stocks, they gained. Asian equities, they opened a week higher on optimism about that potential Fed interest rate cut. The rebound in AI-linked Chinese tech shares and the MSCI index gaining just under about 1%. Now you look at the flows here, because there's a lot of negativity as far as GLD outflows. Remember, GLD only makes up about 1/3 of the gold ETF. So we like to look at the broad space of the whole things. Well, the exchange traded funds, they added about 8,000 troy ounces of gold holdings on Friday here. And gold ETFs, they are up about 17% here year to date, sitting at about 97.3 million ounces. You go over to silver, up about 14%. They cut about 200,000 ounces, and they were really looking at that snapback buy is where they were liquidating some of that. And if you look at last week's changes here, the ETFs, they reduced their gold holdings by about 94,000. They increased their silver holdings by about 1.29 million. They reduced also platinum and palladium, and the gold silver ratio sits at about 80-1. So if you guys have any questions here, send an email to info@bluelinefutures.com. Remember that futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.